All right, welcome back, everybody. Another USDA report under our belts. Kind of mixed trade. Beans went down hard right out of the gate before, and then coming back into here now, prices kind of recovered. Corn's actually a little bit higher. So let's break down the numbers a little bit. Yield trade estimate 176. I think it was 175.9. Came in at 175.4 for corn. July was at 177. Beans 51.9, a little bit higher than estimates and higher than the July number. Ending stocks dropped corn a little bit, about 82 million bushels, 1.388 billion. Beans came in higher, 245 million, and then wheat lower at 610. Down below, you kind of see some notes in here. They manipulated some of the export numbers and things like that to get corn. We brought in some ending stocks from last year. So like I said, the stocks dropped 82 million bushels, and we're sitting at a 175 yield. You know, what if yield comes back up to that 177 area? We have to keep in mind that trend is up near 180. So we're showing a pretty good reduction in yield. And yes, there are some bad areas out there, but we also have to, keep in mind that there are some good areas out there as well. I don't think we have a national crop disaster. And so the market's going to kind of chew on this for a little bit. Is 175 potentially too low, especially now with weather forecasts coming in a little bit milder in here in the back half of summer? Could we see yield come back up? And I think that's what's going to keep corn in a little bit of a trading range. Opposite can be said for beans. We've kind of believed beans have had the bullish storyline in here. They raised yield. And again, on the flip side, if the Dakotas are going to be drier here late in the season, although most of the growing region, again, is under milder temperatures, perhaps yields can come down a little bit. But again, maybe not quite a game changer overall. Just like corn, yield coming back up 2 million bushels definitely brings ending stocks higher. But again, we're not talking about necessarily major swings. And so this market might be a little bit range bound in here as it tries to continue to digest what yields could be going forward, or what they'll actually come in at. World stocks, corn 306 million metric ton, down from estimates, and the July number. Beans higher, world stocks, and then wheat unchanged. So again, you kind of get some mixed responses in here. The corn number should be showing up bullish, but again, we're trying to digest the U.S. Numbers. Beans growing. There's no shortage of beans in the world apparently here at this point. So here's our December corn chart. Really, we're going to kind of call maybe corn in a 6 to 650 trading range. Below 6 seems like it's going to have some demand, especially with the uncertainty of the yield. But on the other hand, like we mentioned, is 175 too low in that it just can't get us above 650. So kind of at the midpoint in the range in here. If we get above 650, you got to start to hand it to the bulls. And of course, the next target's going to be $7. And again, we just feel like there's probably enough uncertainty and support underneath the market at 6 for now. And we'll find out more, obviously, as we get closer to harvest. November beans, you got to call it, 14 to that 1480 area. Again, you just kind of have a mixed feeling on the yield in here. And what the ending stocks are really going to be. We have milder conditions now throughout most of the growing region, and the forecast can push us back down to that $14 level. Chicago wheat continues, to be range bound in here with the 750 to 850 range. Going to take a little while, I think, yet to really break out of this. Final thoughts, the report, when you look at just the numbers, like we said, the bullish side of it, the corn yield and the drop in the U.S. ending stocks, spins the report more to the bullish side. As far as neutral, the wheat drop in U.S. stocks, but then world stocks are unchanged. So not really much there to really encourage the market to break out of its recent trading range in here, like we just showed you. And then we've got to kind of hand the bearish ticket to the soybeans with the higher yield. And then U.S. and world stocks higher as well. But as we kind of explained here earlier on, we have milder forecasts. South America is the cheapest corn. That could keep a little bit of a lid on rallies, as well as the fact that corn yields could potentially come up. Yes, it could get worse, but I think the trade also is saying that maybe this could be a little bit overdone. We'll see. U.S. is cheapest on the bean side of things, which obviously adds to support. And then if yield can come down, perhaps we can get a little bit of a higher price. But are we going to see the big swings in here? It's a little hard to justify because of how the weather forecasts are coming in right now. So again, I just kind of talked about that yield improvement, corn yield drop for beans. We're at some good price levels to get protection in place if you want to look at getting some options in. Fences are good. They're going to give you that trading range that can be done for relatively cheap. They are marginable, but that's okay. Just know what you're getting into. If you're comfortable with your cash sales, these are a good way to keep you participating in the market, get you that price floor. But obviously you'll have a price ceiling as well. But again, kind of in a middle point in here where you can get some good ranges. So if you have questions, just give us a call. We appreciate everybody tuning in. Pretty quiet, like I said, overall on the USDA report. We'll be back next week, Tuesday. Don't forget to hit the like button, and we appreciate you tuning in. Thanks.